I'm going to start with the general housing market, a bit about the rental market, and then obviously we'll move on to the next bit. So first things first, we're going to start with UK house price growth. Well, I can tell you that in the last 12 months, the UK house price growth has been 1.2% over the last year. So a modest increase, but an increase nonetheless. Now, the other thing that I wanted to say to you was the average house price. So I saw this in the news the other day. The Halifax have reported that the average house price has now surpassed £300,000 for the first time ever. So things are definitely moving in the right direction. Obviously, all you guys are property owners. This is great for capital appreciation. And I know as property people, we all want to know what's going on in the housing market, right? Which is why I wanted to put this section together for you. So that's what the house prices have done over the last year. So moving on to the current asking prices. So I've taken this data from the portals, and so far this year, the number of new homes listed in January, there's been an average asking price of £368,000, so above the national average. There's obviously a lot of higher value properties coming on. Now what's interesting about that, that's actually a 2.8% increase from December, almost £10,000. Remember, we're talking asking prices here, by the way, so this is what people are putting their properties on the market for. But that's the largest ever January spike that's ever been seen in terms of asking prices of properties going onto the market. Okay, so it's a massive, massive jump. In fact, it's the largest monthly increase since June 2015. Loads of sellers are coming to the market this year. Loads of sellers are putting their properties on for pretty hefty prices. It's been quite an interesting month. So the supply is high. Okay, now the number of available homes for sale is the highest it's been at this time of the year since 2014. Okay, so loads of activity from sellers. Really, there was a bit of a slump around the last budget. I think a lot of people were holding fire and said, well, what's going to happen? What's going to be announced? How's it going to affect us? And then, of course, everyone's got over that, and it's just full steam ahead, some confidence in the marketplace, and everyone wants to start getting on with their lives and their plans. What this does mean, though, is a third of existing homes for sale are seeing a price reduction. So whilst those asking prices are going up, I wouldn't get too carried away with what that actually means. A lot of people are having to reduce their price because the supply is higher than it normally is at this time of year. So let's have a look at the demand, because obviously the market and values are dictated very much by the supply-demand balance and where that's at. Demand is steady, so Rightmove recorded its busiest ever Boxing Day. Has anyone ever heard that, by the way? And as property people, Rightmove always say that Boxing Day is their busiest day for online traffic. The first 2 weeks of January saw buyer inquiries rise by 57% compared to the December activity. So again, that big spike of buyer activity just as the new year comes in, which is good because there's been loads of new properties to the market. They're going to need buyers. But on the whole, demand is lower than it was in Jan 2025, and it's roughly on par with Jan 2024. So this year's been a little bit slower than the last couple of years for sure. Here's a big one for the marketplace in general. The average 2-year fixed mortgage rate is at its lowest since before September 2022's mini budget. So many major lenders are cutting their rates at the moment to capitalise on the new year activity. Now, actually, I saw in the news the other day, a lot of the big high street banks at the moment are certainly slashing their rates for first-time buyers. So a lot of 95% loan-to-value mortgages have been coming down in rate, and they're getting quite competitive to capitalise on the first-time buyer market. Last year saw a 20% increase in first-time buyer mortgage applications. So that particular segment of the market at the moment is pretty high, pretty popular, and that's having a bit of an effect on the rental market, as you'll see in a second when I get onto that side of it. But it gives you a bit of an idea of what's going on with buyers and demand. So now bring it into the regional snapshot. So in the West Midlands, we're at an average house price of 291, so we're just under the national average in terms of affordability for the average house price. The increase in this area in the last year is bang in line with the increase in the UK, so we're bang in line with the average increase, 1.2%. Month on month, in the last month, we've gone up 1.4%, and at the moment, the average time to find a buyer when a property's on the market is 75 days. Quite reasonable in this kind of marketplace with the amount of competition and supply and obviously where it is. So that's not too bad at all. We're doing quite well. And more specifically in Wolverhampton, in the last 12 months, transactions actually have been down. Okay, so house price in Wolverhampton have an overall average of 240,000. This is on completion now. Okay, so in the last year, completion average price of 240,000. That's across 1,371 transactions. Now, the reason I say that's low, over the last 2 years, there's been about 3,500 transactions. So, of course, the year before the last year was a lot busier. There was 2,000 odd transactions, so it was a lot busier marketplace in Wolverhampton. A lot more properties changing hands. In the last 5 years, there was about 11,500 transactions across 5 years. So again, an average of over 2,000 transactions a year. So last year's been a little bit quiet and a little bit slow, which is interesting. Most popular transactions were semi-detached homes, They've got an average price of 236,000. Next followed by terraced properties, which are an average of 192,000, and detached properties with fetching an average of 370,000. So gives you a bit of an idea, a bit of an insight as to where the market is in Wolverhampton at the moment. And then finally, just a quick look at the leasehold market. There's a bit of news on the leasehold front. Firstly, though, in Wolverhampton, there were 153 leasehold transactions in the last year, which made up 11% of the total transactions. Leasehold properties, interestingly, are the only type of property to fall in value last year. They've fallen in value by 1.4%. Okay, so freeholds obviously increased, but leasehold properties are the only ones to slightly drop in value, 1.4%. Not too drastic, but a drop nonetheless. Now, for those of you who don't know, so what this is going to mean, it's good news for leasehold owners. It should make it a lot cheaper and a lot easier to extend leases, buy freeholds. They're capping ground rents at £250, which is a really good thing. I've actually had transactions myself over the last couple of years where ground rents have been above £250, and it was really, really difficult to get that through because, quite frankly, they're unmortgageable. It was really, really tough to get lending on flats with ground rent above £250. And then after 40 years, it will go to a peppercorn. So they're going to cap it at 250 and then a peppercorn after 40 years and make it easier and cheaper to extend leases to 999 years and buy freehold. So really, really good news for leasehold owners. Another interesting point is they're looking to ban the sale of new leasehold property. Okay, so instead of leaseholds, they'll have common hold. Okay, it'll be common hold. And what that basically means is you'll own the flat, no lease, you'll own the flat outright, and you'll have a share of common areas, and then everyone would be on like a shared committee, all the common hold areas that, you know, everyone owns a share of it. You'll then be on a committee and you'll all have a say in what happens and the upkeep and the management and stuff like that. So common hold is something that was brought in, I don't know, I mean, I was a bit young at the time, but maybe 25 years ago, 30 years ago or something. It didn't really kick off. I think it was in the 90s, didn't really take off, but obviously now they're revisiting that and looking to make it standardised instead of the leasehold tenure. So it'll be really interesting to see how that develops, but I thought it was worth mentioning as that came out in the news just last month. So obviously I knew there'd be a lot of flat owners here. Okay, let's have a look at the UK rental market. So the average rent for new lets in the UK is now £1,320 per calendar month as of December 2025. Highest it's ever been yet again. Now, UK rents have risen by just over 2% in the last 12 months, but that is down from 3.3% a year ago. In fact, it's the slowest rate for 4 years. Now, what we're seeing is the rental market is starting to become a bit normal again, right? So would you all agree that, especially during the pandemic a few years ago, it all got a bit crazy, didn't it? All got a bit, loads of demand, loads of tenant applications, prices were shooting up over the years. We were seeing stats over the last few years of 10% a year increases in rents and things like that. So it all got a bit crazy and a bit out of control. It's coming back to sort of normal levels again, and that's what we're starting to see. Not a bad thing, still very much a landlord's market, still very buoyant, still plenty of tenants out there, and the rents are still going in a positive direction, but it's just going at a bit more of a normal rate. So looking at the West Midlands, the average rent is just under £1,000 a month. It hasn't quite statistically got to £1,000 a month on average yet, which still seems crazy. I remember even when I first joined 6 years ago, we were letting 3-bed semi-detached houses for £700 a month, £750 a month even then, and now they're well over £1,000 a month, typically speaking, right? The annual change in rent stands at just under 2%, so again, relatively in line with what the national average is doing. That's here in the West Midlands. And of course, again, that supply and demand gap, one of the biggest telling things over the years that I've been reporting during my regular updates is very much how big the demand is up here, the supply's down here. We've always had a shortage, and that's what's been really driving those prices up. Well, that's starting to come a bit closer now. So there's actually 15% more homes for rent now than there was this time last year, okay, which obviously boosts a bit of choice for renters. Rental demand is also at its lowest level in 6 years, which is down by a fifth compared to the previous year, okay? Again, like I said, still plenty of demand, but it's just coming back to normal sort of levels. Now, there's a couple of big factors in this from what I can see. Firstly, we've had a 78% decline in migration in the last 2 years, according to the Office of National Statistics. Now, to put that into actual numbers for you, in 2023, there were about 950,000 new people coming in that all needed, there was demand for homes and things like that. Last year, there was about 200,000. So obviously a big difference. The other big difference is, of course, the improved mortgage affordability for first-time buyers, which, as I said, there was a 20% increase in first-time buyer mortgage applications in 2025, according to UK Finance. So obviously some of those will be vacating some of those properties that they were renting. That's obviously getting them back on the rental market. But yeah, on the whole, I think those are the two big factors that are making a big difference to the supply-demand imbalance. So really, really interesting stuff. And of course, a knock-on effect from that, homes are taking a little bit longer to rent at the moment. So the time to rent a property is now increased to 17 days on marketed homes in the last 3 months. 19 days is West Midlands. It's crept up. It's about 20% slower than a year ago. Okay, so again, listen, 19 days to let a house. It's not too bad. We're sure we'll all agree, but it is slowing down a bit, and that's obviously due to the shift in supply and demand. And that's actually 42% slower than the pandemic boom, where the rental demand was crazy and the prices were being driven up year on year. So that's where the market is at the moment round here. If we look at what we think will happen in 2026, as I said, the market really is just shifting back to more normal levels of activity, okay? It's still very much a buoyant landlord's market. There's plenty of tenants out there. I think realistically, because there's a bit more choice, I think you just got to make sure that you don't go over the top with your pricing. Make sure your properties are presented well and they're in a nice state, and people are willing to come in and pay good money for them. Okay, so I firmly believe if you've got the best product you can possibly have from a condition and price point of view, people will come in and pay good money and look after your properties. But there's still a modest supply and demand imbalance. Okay, it still exists, so you've still got a slightly higher demand than supply balance. It's just shifted back to more normal levels. Predicted increase in rents this year is another 2.5%. So rents are still increasing, and it's very much predicted in the marketplace that they will keep increasing over the next 12 months. Now, new investment from landlords is limited, okay? However, again, depends on where in the country you are. There's some parts of the country there's not really any new investment. Obviously, they don't, prices are too high, yields are too low, that sort of thing. Where we are, actually, it's a relatively good area for buy-to-let still. And obviously, further north, again, there's a lot of spots throughout the UK that are very popular for buy-to-let. The volume of landlord sellers, however, could play a big part in the market. So obviously as an agent, I can see the market stats. I can tell you that about 20% of the sales market is made up of rented properties or ex-buy-to-lets or ex-rentals, right? So it is definitely a factor. All I would say to you tonight is this. If you are currently considering, should you really be doing that? And the reason I say that is just there's some things to consider. Before you actually go ahead and do it, just think about, have you actually looked at what the returns are for your investment, and have you optimised where they need to be optimised? Because I've had meetings with people, I can tell you so many stories, and I'll take one example in particular. A local landlord who came to me and said, Ali, I'm thinking of selling a block of, my block of flats. There were 6 flats in the block. And I went and started doing my appraisal and started going through my, through my fact find and getting all the information together. And when I actually delivered the appraisal, the valuation, but also highlighted your rents are very low and this could be done and that could be done, and if it was optimised it could really be performing. His answer straight away was, oh, actually, if that's the case, it's probably worth keeping. Why don't we talk about doing that instead? So when you actually start getting into it and actually assessing it and weighing it up, sometimes you see the right answer might not be what you initially think you have to do. So I'll just say, make sure you've considered it properly. The other thing to look at is, have you worked out how much you're actually going to get after sale? Have you had the right tax advice? Have you taken into account, capital gains, things like that? And also, on that note, if you are thinking of selling, have you actually got a plan with the money? Big thing, right? Because you could sell it, you can pay all your tax, get rid, have that money in the bank, but what are you going to do with it next? Versus, actually, have you got something that you could optimise that can get good capital appreciation? Because I firmly believe that the market will continue to rise, even if it's at a small level. And I firmly believe that rents are going to keep going up. And I think there's a good balance of cash flow and capital appreciation to still be had. So I want you to take all that into account before you make that decision. And finally, have you considered the complexities of exiting in terms of what it actually means to sell a rented property? Because I can tell you on the open market, it's very, very difficult to sell a property with a tenant in situ on the open market when you're looking at first-time buyers and home seekers and stuff like that. And actually having the tenant in there whilst you're marketing it can quite often put people off. It can put people off viewing. It can put people off offering. Maybe the condition isn't as tidy as you'd want it to be for viewings and presentation and that kind of thing. You are generally going to have to serve notice to a tenant. You'll have a void period. You'll have costs. You'll have maybe a mortgage payment. All of these things have to be considered, right? So when you weigh all of that up, if the answer is still, actually, yes, it is the right time, then I totally understand. But I just think it's worth opening your eyes to a few questions that you should be asking if you're in that camp. Now, look, if you are interested in having a chat, and this isn't a big push, I do run an off-market service where I help landlords exit, I help investors buy, I effectively match them up, and I'd be more than happy to have a chat personally. So if you do want to chat, just let me know at some point, and I'm more than happy to book in a phone call or a meeting or whatever. But hopefully that was useful, guys. For those who are thinking about it, just a few questions to ask you to get you thinking, is it the right thing, or do actually I need to look at what's on the table and see if there's a way I can optimise it and keep it? So hopefully that was useful.